Happy Sunday, guys. Today I am going to do a video about buying pressure and selling pressure and why I believe that we will be going to 2800 on the SP 500. Okay, somebody asked me in the chat in the group why I thought that we're going there, and I said I was going to do this video. So here we go. So we're looking at a monthly chart of the ES, which is the S&P Mini, and looking at a 10-year chart, or actually, is this 10-year, 20-year chart, 20-year chart, and we could see here in 2002, we established this low, and then we had this nice uptrend. Okay, I put this uptrend line here, and we could see that we kind of hit those during the highs and then rejected here, just to give you guys a little perspective of where this line came from. Okay, now we have the new trend line here, and we hit that on the most recent lows in December and bounced from there. Okay, and if we remove this here and just draw that one again, we could see this type of channel, rising wedge kind of looking thing here, but we also see here, go back. We also have this channel. Okay, just to be aware of where all these came from. We have this 10-year channel that we're currently respecting, this 10-year channel, and that 2002 trend line kind of met up and was a really big resistance. And we couldn't get above it here, and we couldn't get above it here. Okay. So now let's go back here. So now we're going to talk about what is the market and understanding exactly what the market is made out of or made up of. So the market in general is just supply and demand, meaning that we have prices at certain levels and we have buyers and sellers. Now those price at certain levels are going to attract buyers or they're going to attract sellers. For instance, going back here to 2000, we had the prices here and they attracted a lot of sellers, and the sellers came in and were just taking over. And then we got to this level here and buyers got attracted and buyers started coming in and taking over. Okay, and then here again, we hit those same levels in 2000 that we did in 07, and those sellers were not satisfied at those levels, so the sellers came back in and dropped it even more. And when it dropped it even more, then so buyers came in again, and that's demand met the supply, and the sellers and the buyers have been fighting ever since. Buyers have been in control of this 10-year trend, and we tend to look at what happened in these situations, right? Well, here in 2000, we had the tech bubble, right, that popped. And then here in 07, what do we have? The housing that popped, okay? So in general, what is the market made up of, right? The market is made up of buyers and sellers. Now, who runs the dominance here? Okay, if we look at these two, you know, it's kind of like, okay, it seemed kind of like the buyers and sellers are kind of like equal. But we had major issues at this point, right? We had a tech bubble that every single tech company was going to the moon, right? That popped. And then we had the financial markets, the mortgage, that was horrible and that popped, right? Okay, now we've just been steadily uptrending here. We made back those gains here in about 2013, and then we started making new highs. Okay, and now we're pushing on into this longer term bull market. Now, the buyers are potentially in control of the market in general. Why do I say that? Because all over America, all over anywhere that invests into our market, if it's a job, if it's your own business and you have a retirement fund, everywhere is putting money into the market, right? If you have a job that has a 401k plan, what do? You contribute to it every week, every month, every 2 weeks, whatever your pay period is, you contribute money to your 401k. And what does your employer do? It matches whatever you contribute, right? Or to a certain percentage, it matches it, okay? And what does your 401k plan have to do? It has to be 100% invested or you're not going to be eligible, right? So your fund, your money that you put into your 401k needs to be 100% invested. So if it's 100% invested, that means all of the money that you put in every week, every 2 weeks, every month, that money has to go into the market. It needs to be invested. Every retirement plan that gets federal tax benefits has to be invested, has to have a current investing state in the market in order to get any tax benefits. Okay, so if the majority of America is investing into their 401k plans and their employers are matching those contributions, so then there's money flowing, which meaning buyers flowing into the market every week, every 2 weeks, every month, whenever they distribute those plans money into the market. And you know, mutual funds can buy monthly, bi-weekly, quarterly, wherever they see fit to place the money, they could put the money in. But the money's going in to the market, okay? Pension funds, they have to be invested into the market. Any IRAs, self-employed business people that have retirement plans, if they want their federal tax benefits, they have to be following an investment plan. So they have to have their money invested in the market as well. So all these people generally putting money into the market, they want to see it grow, right? And they're putting more money into the market so they could see it potentially grow. So more money and more money is coming in and coming in. In these 401k plans, these pension plans that run pretty much the market, they can't short the market, right? They can't be on the sidelines of the market. They got to be invested in the market, okay? So the money's always going to be in there, okay? The main shorters of the market are hedge funds, okay? Hedge funds. And the hedge funds don't even compare to the pension funds 401k accounts, okay? They're small fish in that big pond. All right, so thinking out, we have all these buyers in the market, right? All these buyers, but there also needs to be efficiency in the market. So market doesn't go just straight up. Even though looking over long term, it looks like it is just going straight up. But we do have these short periods of volatility or corrections or pullbacks. Now these happen in order for us to go higher, if that makes any sense to you guys, because we need essential pullbacks to go higher. We can't just go straight up. Okay, at this point we were going straight up, and then we got a little pullback, consolidation, and we're going straight up, and then what do we got? Pullback, consolidation, and potentially we're going to continue going straight up. Not straight up, but up. So let's look at, okay, so let's look at here, right? We dropped, this was the financial crash, right? We dropped pretty hard from 1587 to about 665, right? So that was a major drop, right? And then we recovered very nicely, and we've been in this nice long bull trend. Now here, what do we have here? We had a nice push up here to a potential bull flag. Okay, now we have to take in consideration buying pressure, selling pressure. So looking back here, we had a lot of buying pressure, and then here we had a lot of selling pressure. Then here we had a lot of buying pressure, and then here a lot of selling pressure. And then a lot of buying pressure, selling pressure, buying pressure, selling pressure, buying pressure, selling pressure, buying pressure, selling pressure. Okay. So here, what do? We have a nice trend up and then consolidation sideways to attempt a breakout to another nice long trend up, but we failed. Why did we fail here? Well, there was too much selling pressure that could not be satisfied. We were at the top of that channel. We were at the top of the 10-year channel. We had a lot of selling pressure. We're at the top of a 10-year channel where we have a lot of selling pressure, and we failed. Right? This candle right here signifies a failure. Okay, sideways, down, failure. All right. So we failed to get to the top, break the top of the channel. So what happens? We came down and we dropped back down to the bottom of the channel where we caught support. So there was a flood of sellers here that rejected this breakout at this resistance. Okay, we dropped down, try to find some buyers here in this same consolidation zone. Let me go to a weekly chart so it looks a little better for you. So we have a consolidation zone right here between this purple and this orange line. Okay, consolidation point, picking up buyers to try to take off, try to pick up enough buyers, try to push up, selling pressure too strong at these levels. Sold, try to come back in this zone right here and try to pick up buyers again, try to attempt to break out again, but could not get enough buyers, sold down to find more buyers, and here we found the buyers. Okay, here hit the 200-day SMA weekly, found a flood of buyers. We heard in the news that a pension fund or I believe it was a pension fund or a mutual fund, some type of fund, put in a record, I don't know if it was 6 trillion or 6 billion, something like that, record amount of money into the market. And we rallied. Okay, so what happens there? A flood of buyers came in. So buyers came in here, try to push it up, sellers over pushed them, sold off, try to pick up those same buyers, try to see if there was any more left over in this area. Was there any more buyers? There was some buyers, but not enough. So price pushed down. The sellers were pushing down. They could not be satisfied. They pushed. And then here, the buyers came in and said, okay, this we like. Lower trend line, hitting that support, hitting the 200-day. Flood of buyers came in and straight rallied up. Okay, buyers came in here, pushing the market up. So the demand is back, right? The demand is coming back in. Now we broke the downtrend, right? We broke that downtrend. We broke that downtrend with a big candle, okay? Broke that downtrend and established an uptrend, okay? So we established an uptrend, and now we're going to attempt. So these simple trading, simple terminology is higher highs and higher lows. is an uptrend. Lower lows and lower highs is a downtrend. So here we had a high, we made a low, we had a high, we made a low, we made a lower high, made a low, made a lower high, made a lower low, right? Low, low, low. Here, now, we made a high, 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 high. We're still making higher highs and higher lows here, but this high has not been broken or tested. Now, I believe that we are going to test or break this high, and that is going to be at 2,800. Okay, because this high to low here is essentially a trend, right? So this high to this low is a trend. So we have a trend here. We have a trend there, and we are establishing a trend here. This trend needs to break this high in order for us to break this overall trend. Okay. Now, this downtrend is broken, yes, but if we don't break this high, then we can still be going lower. We need to break this high in order to establish on the weekly chart that we are making higher highs than the previous trend, and we're forming a larger uptrend than the previous downtrend. Okay. So here's the high here at 2814. I believe that is 2814. Okay. So 2814 is previous high. Okay. So we need to break that. That's going to be strong resistance. And if we extend that to the left, we could see that that's going to be that high, that's going to be that high, that's going to be this support over here, that's going to be this high, and this high here. So that's going to be some resistance area, right? Major resistance area right there between that 2790 to 2814, which gives it smack in the middle about 2800. So 2800 is just definitely going to be major resistance, but we are on the path to going there. Okay. So buyers came in, they're pushing up above, they're going to go and try to test this area. We do have some points of resistance that we are getting through right now. We have got through the 50-day, which is a good. We got through the 100-day. We're holding that currently, which is a good sign. We are holding this uptrend, which is a good sign. Now, we essentially made room for this uptrend to hit that 2800. Okay, so essentially we can push through and we could hit 2800 really fast. We could hit 2800 within a month or two. I have my money on a month. They hit 2800 in about a month. Within a month, right? So this time by March 10th, we should be hitting 2800 or sooner. Okay, I think sooner, but we will see. That 200-day needs to be broken, and I'm sure it's going to be broken with a big candle. And if it's not broken with a big candle, it's going to be gapped over and ran through to this area right here. And we could see that on the lower channel. We had the past couple days, we had a lot of selling pressure. So we had a pattern here. We had an ascending or a rising wedge, and that broke down. Selling pressure, and that selling pressure got bought up here, but then we got more selling pressure, and that selling pressure again got bought up here. Okay, what does that tell us? That tells us that sellers came in, started selling the market. Buyers couldn't handle it until we got to this level, and then buyers started to come back in. Then sellers said we weren't done, and they still try to sell off and break this channel. And sellers try to push, and buyers came and said, nope, we're still here and we're still strong. And they pushed up, held this channel, and held the 100-day, and held that and closed above it. So buyers are saying there's still demand at these current levels, and we're looking to push higher. This daily support suggests that there is a bull flag here. Let me remove this pattern that's already complete, and we could see that there is a daily bull flag. Daily bull flag. Daily bull flag here. And we're holding those levels. And essentially, if we push up, we're going to get a big candle through this 200-day, because if this is a bull flag, we're going to get a nice pop above this 200-day, and probably going to go to 2750 or even 2760 on that pop up. Okay, so buying pressure is there. What are these candles called? Bottoming tail reversal candles, or hammer candles. What does that suggest to us? Buyers are coming in. Buyers are coming in. Buyers are coming in. Okay, there's selling pressure, but buying pressure as well kicked in. All right. So if we assume that, let's see, duplicate that. If that is our levels of support on our bull flag, then this bull flag suggests that it's going to take us to 2814. So once this bull flag fires off, we're going to 2800. Essentially, it says 2814, but I would say 2800 just to be safe, because I know round numbers are strong resistance. Whole numbers, strong resistance. So this bull flag is suggesting 2800 will be hit when this fires off. So be prepared that when we get above that 200-day, we are going to be going to 2800 really fast. Okay, so everything is looking good. There was a scare, but the overall plan is it's still going. It's still going to try to meet those previous highs of this overall trend. And you can see there's a lot of consolidation in this area. That means there's a lot of resistance. Okay, and that's where we're having trouble right here, not only because of the 200-day, but there's a lot of resistance here. Once we push up, we're going to see there's a lot of resistance at that 2800, 2814 level, and we're probably gonna hit a wall right there for a short time and build another pattern. But let's go back to our weekly chart, or actually to our monthly chart. Okay, let me remove this channel. Oops, what did I do? Let me remove this channel. Okay. Let me remove this channel. Just okay. So essentially, I said before that I believe we were making a megaphone pattern on our monthly chart, where, let me change these colors here to purple so we could see them better. Okay, so we're making this megaphone pattern, right? Essentially, that's what with the information given currently, that's what I am assuming. Okay, so here we dropped, bounced, 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 and essentially we could be going to the 3,000 before bouncing back down. If this pattern holds true, then we could be coming back down to these levels. Um, who knows if it's true or not, but that's just what I'm kind of seeing now. But if this is true, and if this pattern is what's going on, then essentially we will be going to go testing the highs. Okay, and if we test the highs and fail, then we're going to come back and possibly suggesting that we're going to test the lows again and be in a little consolidation. But if we go back to that 10-year, we go back there and draw our channel, we could see that our channel comes above it a little bit. And so if it does come above, then we can definitely fall, but we could hit this lower trend line here and definitely break this pattern, or we could continue it. Who knows? But that's all what I'm seeing. So with that, I see that there's buying pressure. We're in a potential megaphone pattern. I see that on the weekly chart, we had hit a lot of selling pressure that dropped us into this zone again and then dropped us down below. But I've seen extreme buying pressure at this low here, and we're already breaking this high, and now next is we're going to be testing this high. And if we break this high here at 28.14 and we get above those previous highs here, then this new high, or this high, all-time high, is going to be next. Okay, so just keep in mind, we break these highs, all-time high is going to be next. Okay, so 2800, if that breaks and we get above it, then this one's next. But remember, lots of selling pressure here, lots of selling pressure. Okay, and 29.47 is not that far away from 3,000. So we can exceed that 29.47, hit 3,000 and sell off hard like we did before. But just keep in mind of that. Here, lots of buying pressure, pushed up. Okay, having a little trouble at the 50-day, building a pattern. Okay, and that pattern is essentially suggesting on our daily chart that we are going to that 2800 as long as this pattern holds. All right, indicator charts still looking good on the daily. So DMI, buyers in control, RSI, buyers in control. Momentum still above, slowing but still above. Weekly chart, what do I see on the weekly chart? Momentum moving up, lots of buy volume. What do I see here? I see the sellers are losing control of the weekly trend, right? Sellers have lost control pretty much. The average crossed over the red, which signals to us here that there was going to be a trend change. Okay, this was a downtrend. Now we're establishing an uptrend. The buyers are coming up. They're going to get ready to fight with them to cross over. And then the RSI is already poking its head out as suggesting the buyers are in control. So I got momentum up, I got green volume, I got the buyers coming up trying to take over, and I already have the RSI taking over in the buyers. All right, on my weekly chart. Monthly chart, I see that the sellers tried to take over and they hit the average and could not get through the average, and they're below the average. That's not a good sign for taking over and control. I see that the RSI bounced off that 50 and it never fully penetrated and went through it. It bounced right off of it. It penetrated a little bit, but bounced right off of it and stayed above, signaling that buyers are still in control of the market. Okay. Daily chart, I have buyers in control, buyers in control. Okay, everything's looking good. So, figure here, this was a good time to get in, and we're going to be hitting these areas probably in less than 30 days for sure. All right, guys. So remember, who controls the market? Buyers and sellers. All right. The majority of the time, who are those buyers and sellers? Okay. Majority of that time is mutual funds, pension funds, people that have a 401k account, pension account, and considering looking at our economy, and we see that unemployment is at an all-time low. What does that mean? That means employment is at an all-time high. Okay, so if employment is at an all-time high, and majority of people that are employed have 401k plans, that means 401k plans are probably seeing a lot of money flowing through them. I don't know about record amounts. I know last year, 2017, we had a record inflow of 401k, but I tried to research the numbers, couldn't find them. Oddly, those numbers are very, very secretly for the flows of mutual funds from 401k plans and pension funds into the market. So I searched, I could not find the information, but I believe it's pretty high, considering that we're at record low unemployment and we have a lot of jobs out there, and they're probably, giving out 401ks, and people are putting money into those, and Trump's always talking about 401ks and growing it, and people get excited and they want to put more money into it. So if that means more money that's going into the market, then that means that the prices are going to be in higher demand, and with higher demand, price will increase. Okay, if there is low demand and people are taking money out of their 401ks, taking money out of their pension funds, if there's a lot of outflows, then that means that people are exiting the market, and that means there's a lot of selling pressure. So if there's a lot of selling pressure, then market's going to go down. But at this time, I don't see what the catalyst is for lots of selling pressure. I see a lot of catalysts for a lot of buying pressure. So considering that there is a lot of buying pressure in the market, I feel like we're going to go to 2,800 and even more. That is my bias, and that is what I'm seeing in the market. Of course, this all could change from anything, but as of now, that is what I see. Hope you guys learned something, and if you did, click the like and subscribe if you haven't, and enjoy all the analysis I post on the Facebook group, and hopefully you guys are continuing